Okay. Okay. So this fund started very much. I mean, took us quite a long time to create. I was very keen on trying to solve a particular problem. So many of our clients who are beginning the investment journey, or in many cases our private clients who are trying to fill a gap in their portfolio, who care about the oceans, but say, oh, you know, it's all too hard. Everything in this space is small and illiquid or what have you. That's something that we bump up against a lot. And I was very keen to try to figure out, could we create a liquid public equity solution in fund format, which would allow people who care about the oceans to direct capital in this manner and create a direct link. Because you know, a lot of our early generation in trying to create this fund was frustrated in the sense that as a small minority shareholder in a public company, are you really going to influence the oceans, or is it too diffuse? And this is what we were solving for in many respects. So maybe if I advance to the next slide, my only health warning, if I can ask you to bear with me, because we are in the process of creating the fund right now. Please bear with me that I have to give you a little health warning. This is obviously a closed door session, so I have to say that you know, by no means should this be construed as offering investment advice or creating an investment opportunity for those on the phone. We've got to do that with sophisticated investors. So I've got the health warning out of the way, enough said. And this is also not meant to be a commercial for Credit Suisse. This is just a slide that I pulled from a prior presentation. But it's really more to express the fact that we're dead serious about trying to help in the ocean space. And my journey began, first of all, I'm super passionate about the oceans. I call myself a water baby at heart. And I was trying to figure out this space from the large investment pool capital point of view. And I set my teams a challenge. I said, let's look at this ocean space because we see this energy coming from our clients wanting to put money to work in the space. But, you know, they say that there just isn't much out there and they don't know how to do it. So when I sipped my team on the topic, one of the things that we started with was, where has the capital previously been invested? And the real shocker for me when we did this analysis was, of the 17 UN Sustainable Development Goals, you all probably know this because you're in the space, but it was a total eye-opener for me when I found out that, you know, the SDG 14, Life Below Water, was the second least invested SDG of the 17 goals from a private capital point of view. You know, it just was shocking to me given how critical the oceans are to planetary health and, you know, our very survival. So then I asked myself, well, if that's the case, why? Why is it? And we commissioned something called the Investors in the Blue Economy, which is a little reference point to the little picture you see on the upper left-hand side. And we went out to the institutional investor community in a very, I would say, sort of process-oriented way, in conjunction with Responsible Investor. And we polled these investors and asked them, you know, are you fundamentally interested in the ocean? Do you care? Is it something you'd want to put capital against? If so, why haven't you to date, and so on. And the net of it was that people cared. The overwhelming majority of institutional investors said that they would love to put capital work in the space. But the fundamental issue was there was a dearth of investments that met their needs. So when we're speaking about the institutional community, a lot of it revolved around the ability to trade in and out of the opportunity. So they wanted something that was liquid. And so that was quite informative for us. And then we've got lots of other things where we're participating, trying to help move the needle by raising critical topics. Obviously, plastic is a critical topic, which we all know and feel. But what we tried to do through our research department in Asia was really raise awareness of the pending effect on companies that might be contributing to the plastic problem and relating that to how that could impair valuation of the company. So really thinking about it through that lens. And then, you know, we started attacking other sectors, including we also want to be a part of the standard setting for our industry to help mature the industry. And so we're part of the group that is sponsored by the UN Global Compact on defining a framework for the blue bond market and so on. So again, just to gallop through the sorts of things that we're involved in, and very, very keen to collaborate. That's a key word for us. We know what we know. which is the investment community and how to structure deals, but we also don't claim to be climate scientists or ocean experts, but we certainly want to collaborate with those who are. So lots of things in that respect which maybe lead to future conversations, but every single investment opportunity that we develop in-house will always be with partners who we think bring a certain level of expertise on that given topic, including the oceans. So if we can move to the next slide and diving into the fund itself.
Yep. Here we go.
And here's my little health warning. Let's go ahead and skip over that. That was just the disclaimer. Right. Lawyers are always all over me. So the fund. Why now? I don't think I have to educate any of you. The criticality of the ocean, is pretty apparent. But I would say, while everybody on this phone is acutely aware of everything from acidification to warming of the oceans to overfishing and so on, it is not actually that well known. It's so sometimes when you're in the space, you put blinders on, you don't realize that the broader community doesn't really know. And the more I engage, especially with private clients as individuals, it is pretty apparent to me that, we as individuals are often susceptible to the sound bites that are out there in the media. And that galvanizes maybe people to do a bit of activism and engagement, but it doesn't necessarily come from an informed place. So we felt that in a funny way, just by creating this fund and really getting into a deep dive discussion with our clients, we could also have the added benefit of raising awareness and in an informed way. This whole thing, as I said, was all about trying to create a thematic solution that could be in the liquid space, that could truly drive alpha. And I am also dead keen on trying to continue to promote the concept that if you're investing sustainably, it doesn't have to be at a sacrifice of return. Again, if we're going to scale capital, we can't be talking about concessionary finance as much as that there's a place for that in the world. In my world, we have to start with trying to at least generate a market rate of return for the investments that we create. Otherwise, we're not going to attract the institutional investors. And even the great misnomer with the private clients is you've got all these private clients who have patient capital and they're willing to take concessionary returns if they're passionate. That is a tiny little tail of the community that I operate in. If I were thinking about a bell curve, the vast majority say it starts with returns and the impact should be the icing on the top, especially with sophisticated high net worth individuals who have family offices and so forth. So anyhow, we wanted to play in that space, but this idea that it was really hard as an institutional investor and as a minority investor to actually really drive change, that led us to ultimately land on the concept of engagement. And then, as I said, partnership with those in the space that we think have a great credibility to lend. We did an RFP once we had the concept of this fund. We went out to 20 different institutions to partner with, and we asked our broad community across Credit Suisse and our business units who would be involved to vote, and overwhelmingly Rockefeller Asset Management in this space was the clear leader of who we should partner with, and I can talk about that in a moment. So if you turn to the next slide. What do we mean by this concept of engagement? So engagement is effectively using your power as a shareholder through voting activity and really deep engagement with your investee management to try to drive behavioral change. This may not be apparent to all of you, but this concept, this engagement concept, is one of the fastest growing segments of the ESG investing community overall. So out of the 30 plus trillion of sustainable assets that are being put to work in the ESG space, this engagement concept with explicit commitments has grown some 40% over the last several years. And so I think what's happening is it's very compelling to people to say, even in the public space, that you could go and engage and drive behavior change. And this is one of the reasons why Rockefeller Asset Management was so key as a partner for us. They've got a 40-year track record of demonstrable engagement. So what they'll do, and this is not, in a disruptive way, they want to do it in a very collaborative way to identify areas where companies could be better citizens, stewards, what have you, on specific topics. and they identify those topics and they go and try to have a discussion with management and try to then set out objectives for how that company can meet what they expect as a shareholder. And they can actually show you over the period of time where they've engaged a differential uplift in share price. And there has been some interesting research studies that have surfaced where they've looked at a whole host of engagement funds. And what they show is for engagement where it's worked, i.e. where the company has responded, you can see an uplift in share price performance pre and post engagement. And for those that failed, i.e. the company just said, not interested, you don't see a degradation. So at the very worst, no harm, no foul, but at best we can actually hopefully demonstrate to our investors that it'll lead to alpha. So if we move to the next slide, what are we going to try to do with this fund? It is to identify a compilation of companies to invest in. These, again, public companies, but these are in several different categories. So you have ocean leaders who are already there doing great things for the oceans. Those are pretty straightforward, obvious, in terms of our objective of trying to make a difference in the ocean. Then we have the next section, which it would be companies that have ocean solutions. So something that they're deeply doing in their business activity is already leading to better outcomes. And then what is sort of compelling in a way are ocean improvers. So these are companies that, aren't bad companies, not bad management, but whatever it does in their business is actually not helpful or indeed harmful to the ocean. And we can identify these companies that if they will engage with us, we think we can change their practice. And we think that's, interestingly enough, probably the best source of alpha. And probably goes without saying that those who don't, that are doing bad and don't care, we're certainly not going to invest in them. But we might be quite vocal as to why we wouldn't invest. And that in and of itself may create some behavioral change, interestingly, over some sort of intermediate period of time. So that's effectively the concept. We break that down into subsequent categories of, where we're going to invest. But, that will be anywhere from pollution prevention, and then we'll have engagement topics that are very directly related to pollution prevention. It could be nitrogen runoff, it could be other things. Another key category would be the carbon transition. So it's focusing on anything that might be associated with ocean's contribution to CO2 reduction. And it could be, ocean and offshore energy, it could be, a whole host of other things, but it's that sort of, I'd say, transition bucket. And then there's a whole bucket around conservation. I think many of you who were speaking a few moments ago, you talked about the work that you're doing, this concept of natural capital solutions potentially being more efficient, maybe more cost effective. Could we be promoting and investing in those sorts of companies that obviously conservation then also contributes to the natural ecosystem? So those are the bigger buckets. There's a whole lot more nuance to that, but we'll start with a very large universe of companies and winnow them down to fit them into these categories, and then seek to engage. So I'll stop there. That's really the gallop through the conceptual. Not in a position where I can talk about terms and conditions and all of that, but hopefully at least conceptually that gives you a feel for what we're up to. The only other point I would make is when I said we collaborate with those and we want to be informed by climate science and academia. One of the advisors to the fund, which also has an affiliation to Rockefeller Asset Management, is the Ocean Foundation, which has got a 10-year history in the ocean space as a nonprofit that also has deep connections to the broader Rockefeller family. So I will leave it at that for now.
Thank you so much, Marissa. Very, very informative, very exciting, extensive work going on there, and the commitment and efforts from Credit Suisse with the Ocean Investor and the investment sort of review work that you did previously and supported. So I'm sure there's input and questions, and I'll just I'll get out of the way and we'll have a kind of open forum and let people sort of jump in and just try and not come on over the top of each other, but not slow things down by me having to kind of moderate explicitly. But I'll just say that in terms of collaboration and engagement, certainly that's what the World Ocean Council is all about, in building this bridge between the ocean industries that use ocean space and resources and the investment community. And there's certainly, well, there's some of our members are part of this roundtable and would love to keep you and Credit Suisse involved in this ocean and funds roundtable as we continue to develop it and build that relationship, and can bring in the expertise on various issues and industries as is valuable to you and the other members of the roundtable, of course. So with that, I will open it up and to those that are on the call here to dive in deeper here on this development.
Hi, it's Erica. I have lots of questions, if I may.
Sure.
So Marissa, thank you for that. And first of all, I think this is so crazy important. So I love that you're doing this. I spent the decade of the 90s at Credit Suisse, so I'm very proud you're doing this. I do have a bunch of questions. One, I guess there's an analogy. We had a client who came in and, you know, she was doing a tribute to her father, and it was all about the oceans. And we do have challenges finding product for her. We knew about the Rockefeller Oceans Fund and, you know, a few others. And then we kind of looked at it more holistically to find her some stuff. But my question one, I guess, is how, kind of what's the overlap? I see why you selected Rockefeller. I know that that fund has a good chunk of industrials in it, as would a water fund. And so I know you can't drill down that deeply right now, but I'm a little curious, if you can, about the construction. If you're allowed to talk about it yet.
Sure. Well, we've only just launched, so when you say that it has industrials in it, you may be speaking of other funds of Rockefeller. So this fund, we are literally, just as we speak, we launched more or less a week ago. You know, I will say that the take-up has been extraordinary. For us, this has been the fastest selling fund, if you will. I hate thinking of it in sales terms, but the best subscribed fund that our investment solutions team has ever put on the platform, which is an amazing thing. So we're connecting, you know, on this topic, and it's resonating with our clients. So we're, you know, well into the triple digits in terms of the take up in just literally less than 10 days. So I think we've connected deeply, but we have not invested and deployed that capital yet. So I think, Erica, you might be referring to maybe some existing funds that might have a stream of them that might be a little bit tagged to the ocean. But this is purely a brand new fund that will just kick off as we move from our first close to deploying the capital. Industrial companies, though, maybe to sort of answer, I think, the question you're getting at, will we invest in them? The answer is yes, because we think there are many industrial companies, particularly in this bucket 3 of ocean improvers, that maybe would like to do better. Well, there could be a bunch of things. You know, they could be actually not terribly aware of actually the imprint that their business has on the oceans. You know, I referenced something like nitrogen runoff. You know, some companies whose waste practices may be very unfriendly to the ocean may not fully, deeply appreciate just how bad that behavior and practice is to ocean health. So we think that maybe an industrial company like that, we could zero in, you know, again, informed by science, academia, et cetera, to identify a very specific item or set of items that an industrial company could do better. And we'll go in and say, we'd love to invest in you because we think we can make you a better company. I think generally speaking, companies will respond to that. I mean, I want to always give people the benefit of the doubt and say most people are kind of good people and most management teams are good management teams, and people generally want to try to do better. Oftentimes it's either I'm not aware or I don't know how. So we hope that for those companies who are open and willing, we can help along that journey, and we tie our capital that. They're very well, though, you know, I'm not a Pollyanna in all this, they're very well maybe companies say, you know what, it's all too expensive, all too hard, all too something. You know what, I'm not interested. I've got plenty of other people want to invest in me, and, you know, please go away. Obviously, we won't invest in those companies because the whole theme of this is the ability to engage for better outcomes. where we can. So I don't know if that's fully addressing your question, but please.
Yeah, we'll talk offline because, I totally get that. And so I wonder what the parameters are going to be. So like in a water fund, you have to own industrials to get the exposure, but you might have a rule that, you have at least 50% of their revenues come from specifically water stuff. So when we get a chance, by the way, I have one other question, but when do we get to talk and diligence this? Soon?
So at the moment today, this is a fund that is proprietary to Credit Suisse. So only for those who either are clients of the bank or work through us through what we call our EAM platform. So where we have agreements with third-party providers. I am keen as we move into the next phase we have had an enormous actually reach out from other institutions that have said, could we offer this on your platform? And certainly my aim here is, we'd like to actually widen this because we think this space is so critical that we don't want to be proprietary over time. So maybe we take that one offline because I don't know how or if we connect with your clients and in what capacity, but very.
Great.
Then,
Thanks.
okay.
Sorry, Erica, maybe, Erica, maybe we'll let some others jump in here with some questions.
Sorry.
Yeah, no, I think there's a lot of great information being shared here, but just
I love the enthusiasm. Bring it on.
Maybe if I can ask a question to Marisa. So I understood your position.
Sorry, Olivia, maybe just to give your name and affiliation for those that haven't spoken yet, just as.
Yeah, so I'm Olivier Rebaud from Blue Oceans Partners. And so you explained that today you cannot invest with your fund and your clients. You cannot promote any funds that are first-time funds and small funds because you need scale. So this I totally understand because you place yourself as being providing opportunities of investments on a large scale for your clients. But is there any other pocket within Credit Suisse from its own balance sheet, for example, to help support the development of new funds that you will be able to sell to your clients in the future? So to help new teams emerge.
Yeah, it's a great question, and it's a challenge all the time because I'd love us to be able to seed fund everybody and support everybody who are doing good things. There is a limitation in many respects on funds. There's two constraints. Just being very candid because I think it's important so that people kind of understand the challenges. On the one hand, there is a sort of a regulatory pressure on us that is really quite difficult, if I'm being honest. This whole MiFID II regulation about suitability for clients and what clients can and can't invest in, meaning that if anything is illiquid, which many small funds almost by definition are illiquid, you have to be what's called a per se professional investor. So that takes the universe from as we call it retail down to people who can demonstrate to us as clients of our bank that they're professional investors, and there's a whole series of things that you've got to demonstrate. If you're in the fund business, you probably know all this, but how much illiquid business do? You have to show that you've got a certain net worth, blah, 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 million and one tests. So that makes illiquids tough. We can do it. It's not that we can't at all, but the hurdle is really, really high. And to gear up a Credit Suisse machine to sort of bring that onto our platform, as well as then demonstrate to the regulator that we've done all the suitability requirements and then the diligence, is what leads us to a place where we typically would say to put on our platform, there's got to be a minimum size that's worth this, getting the machine going to do all that work. And the second thing is that we just fundamentally have a rule that it wouldn't be a first-time fund because we can't demonstrate the track record as a fiduciary matter to clients. Now, all of that having been said, I am keen to promote the industry because you've got to start somewhere, right? And if we only say we'll do the big at the exclusion of the small, then where does the small ever grow from? So in that way, what we try to do is make connections in a, I'd say, sort of non-attributable way So yet again, the wonderful regulators and lawyers get involved. But for a Credit Suisse to make introductions, we have to be very careful that we're not then deemed to be endorsing it. Because if we're deemed to be endorsing it, then we have got to demonstrate that we've done all the diligence because we're legally liable. And the enormity of what that means to do the deep diligence, when we go in and diligence something, it's a long, extensive process over many, many months and requires a lot of human capital, manpower. So we have a set sort of rules about how we can make introductions and then say, you're a professional investor, over to you, no attribution. We have these things called big boy letters that people sign that says, yes, Credit Suisse hasn't pushed this on me, I'm my own independent decision, blah, blah, blah. We are trying to solve for that equation because it's a real bugbear of mine, the fact that it should be easier, that we can take all this energy that we have from private clients who may want to do direct deals, who are sophisticated, and yet we have this interesting role in the middle where we ought to be able to be the world's great matchmaker without having to be deemed to be legally liable and do all the work on every fund that exists. And we're hard at work on trying to create a legally compliant platform where we could do that matchmaking. We're getting very close to figuring that out. So very happy to keep this group informed if that's of interest and maybe come back and do another session on what that's all about. But I am very hopeful, having spent 18 months really in a big way on this, to think about how to create that sort of a matchmaking systematic platform. There are others out there, by the way, that are in and around the same space, but I want to do this very specifically with the sustainability community. So this would only be a sustainability type of a linking platform that we could to support. So that's probably the best way we can do it. In terms of our own balance sheet, I think you were also getting at the question, could Credit Suisse itself on balance sheet invest in a fund? There are also very strict regulations about us acting as an investment, holding investments. If we create funds, we could seed fund some of them off balance sheet if they're self-created, but then that gets us right back into the CERC function of big versus small. And so for us to hold like direct equity investments, there's yet another regulatory regime that comes into place and holding it on our balance sheet. So the best I could say that we do today is give visibility, as I said, to those who are doing things well, and then almost let the connections happen organically. So we have multiple client events where sustainability is a core theme or oceans is a core theme, and we bring people into those events and showcase them and then just let the connections happen as they may be. And that sounds maybe a little light, perhaps to meet maybe some of your needs, but actually it's proven to be reasonably effective because of the reach that we have. And half of all of this is about making connections with people who have a passion. So I'll stop there. I know it's a long-winded answer, but it's not a simple one.
Great, thanks. And I think I really see we'll have to have a discussion, Marissa. Really a great interface between the portal and platform that the World Ocean Council provides with facilitating your connecting with particularly the industry side, as well as through this roundtable with the growing community practice around ocean sustainability investing. Other questions or comments for Marissa? We'll keep going for a little while here. I think this is a rich discussion, and we'll keep going as long as people have the interest to.
Sorry. Yeah, please. No, please. No, you go. Thank you.
Okay. Marissa, thanks very much indeed. This is totally fascinating. I'm Andrew Smith from Greenbackers. We're very much at the other end of the scale from Credit Suisse and have particular interests in introducing clean technologies into the world. What I'd like to ask is whether you can think of ways of using the council here and this group of people to suggest answers to problems you come up against in some of the companies you're looking at, a source of information, if you will. And if I can expand on that a little bit, what's in my mind is we individually, separately, I'm sure, I come across a lot of solutions, some of which I think are really good. They're at a much too low scale for you to be interested in directly. But at the top of the food chain where you are, you'll be coming up against companies who will be telling you things can't be done, this can't be achieved, or that cannot be achieved. And you know, certainly, I think it's the influence you can bring to bear on the marketplace and the behavioural change that you can make if you are informed. Clearly, you have to check things out. Anything we tell you as a group, I'm sure you have to check out. But the information that's available and the knowledge that's available around this virtual table, every month I come on and it amazes me. It's potentially very impactful, and very often it's information that's otherwise quite hard to get to. So I wonder if that's something that's potentially of interest to you.
Yeah, very, very keen. And, you know, there's just a few things off the top of my head, and obviously, you know, could iterate through. But as an example, you know, we have been working with some of the, I'd say, big thought leaders about the climate transition and how do we create pathways for either high carbon emitters or those who, you know, environmental challenges to find pathways to get to a better outcome. And I just used net zero as an easy one because carbon emissions is obviously where most of the world focuses, and biodiversity is a lot harder. You know, we're constantly trying to figure out, you know, are there new technologies that will unlock that path to net zero? That's just one small example. I guess 2 weeks ago at something called the Climate Bond Initiative, which is, I don't know if any of you interact with the CBI. The CBI is the nonprofit organization that created the framework for the green bond market. So it's essentially the overlay for how to think about what would qualify as a green bond. And I'm a 30-year career investment banker. I didn't give you much of my history, but most of my history was spent in the capital markets. And an observation that I had, the green bond market is now $1 trillion volume market and it's grown to this size over 10 years. That's fantastic. But what's happened is that's a very prescriptive market, and the use of proceeds of the offerings of those issuers can only be invested in green. So it's already investing in already green. But what I was seeing was companies in high carbon emitting industries who genuinely want to transition their business plans know they need an enormous amount of investment, and some of it's risk capital and new technologies to find a pathway that doesn't exist, as just one example. They can't avail themselves of the green bond market because there's just no real pathway. And then I got regulators beating me up as a bank going, why aren't you banks, you know, accelerating the transition, blah, blah, blah. Why aren't the capital markets financing, blah, blah, blah. And then we have the investment committee that's saying, you know, I want a more diversified portfolio. You know, the already green stuff's great, but, you know, bring me more. I think a lot of actually value and alpha will get created by investing in companies in the transition, and we want to foster and accelerate. So that was a moment for me to say, I've got issuers who want it, investors who want it, and regulators who want it. Maybe we create a market. We went to the CBI and said, could we actually create a framework, which is a sister framework to the green bond market, that would sit side by side, specifically geared at the high carbon emitters, to allow them a dedicated pool of all this enthusiastic investment capital to invest in them to fund their investment in the transition, as an example. And I have every reason to believe it's going to be, I mean, the need is trillions. We know it. I mean, we can do the math on it. But people have got to make those investments, and there really should be dedicated pools of capital for that. So we spent a year with CBI, and we've come up with a framework, and now we've launched it, and we're in the process of creating this kind of a market. And I do think that those companies, it's a sort of long-winded way of saying, but those companies that are keen to transition are coming to us every day saying, I actually want to make investments in those solutions that can actually get me there. And so, especially the high carbon emitters, you know, maybe there are some solutions that you come across that would help unlock. So on the one hand, we may be able to make corporate connections. On the other hand, another route would be we are deeply engaged with partners like the ETC, the Energy Transitions Commission. Don't know if you all know the organization chaired by Lord Adair Turner, you know, who worked for several years to ask the fundamental question, can you get to net zero across the high carbon emitters? And then they've done all that academia and science and math and whatever to figure it out. That organization is constantly promoting new technologies that will accelerate the pathways. So I just think there's lots and lots of places where maybe what we do every day can give visibility, surface, potentially funding, potentially connections, who knows, to those sorts of solutions. So, yeah.
Thank you.
Leave it at that.
Yeah, hi Marissa, this is CJ Palmer from Stockholm, Sweden. Great presentation, thank you so much. So I just wanted to touch upon what you said about behavioral change here, and also I thought I heard those words from you as well, Andrew. I'm with one of the founders of Verdivo Capital, but I'm also working actively in other fields of sustainability in general, which I'm not going to go into too much details on here now, but I thought I heard you say, Marissa, behavioral change and these sort of opportunities, or maybe responsibility or possibilities that are out there. So I just wanted to hear you sort of potentially clarifying that a little bit, what you refer to, because does this sort of behavioral change that you're trying to promote and to put into action and effect, is it exclusively into the sort of financial sector? I mean, you have a fantastic reach with your company, and the possibility to reach people also outside of the financial, sort of strict financial sector. So we could talk about that offline. I got some ideas on that, but I just want to hear your comment about what you're doing has so much potential to and could potentially be spread outside of the financial sector, as we are into the decade of action now, where a lot of things have to happen, especially in the ocean field and many other sustainability fields. So I guess my point is, behavioral change, where do you sort of push it among who? Only financial sector, or other areas as well? Thank you.
Yeah, I mean, I view my role actually as responding to what I call the holistic circle of stakeholders. So obviously we're a financial organization, and we deal therefore in helping people allocate and direct capital. But at the same time, I grew up in the investment banking world, and my whole world was advising corporates. So the corporation behavioral change is a place where I spend a lot of my time. So I'm advising boards and CEOs about how to transition their companies and make them better stewards of both the environment, but also the S in the ESG, thinking about social policies. How do they incorporate and integrate those objectives deeply in their organization, and so we talk about everything from thinking about your environmental footprint and your social policies at a board and executive level, but also how do you embed it deeply in your organization to try to create change? How do you ignite from the bottom of the organization up to also create innovation? A lot of the, I'm informed all the time by my next gens in our own bank that push me all the time, things like, little things that seem little, as they bubble up, but actually are pretty profound. Why do we have a plastic bottle? You're out there waving the flag for sustainability. Why do we have plastic in our conference rooms when clients come in and see it, or at a conference, this sort of thing? Are we even serving, giving them an alternative of plant-based food, in a canteen, and all this stuff. And then I also would say that we have a big influence, and we're trying to influence policymakers. Certainly, they look to the financial community and banks like a Credit Suisse to give them advice. So I do sit on things like the high-level panel informing the EU Commission on, the sustainable transition and what policies could create the appropriate incentives or disincentives. I also then every day interact, when I talk about our private clients, I'm speaking to them as individuals. So I don't always only speak to them about their investment habits. We also talk about their behavior as people. A lot of times they'll come to me and say, oh, this is all too hard. Like, what can I do as an individual? And I say, well, you got a lot of power with your investment capital, but you also have a huge, huge power with your consumer wallet. Have you thought about that? All that sort of stuff. And this energy from the next gen, I call them my activist tribe, but I have curated about 2,500 kids of our next gen clients, and these are the children of the wealthiest people in the world. And boy, you want to talk about where we find energy to make change. They are absolutely dead set on this, and they're transforming their companies. They are virally wiring up with their friends and creating that kind of change through their own, I'd say, activism. But I'm constantly also trying to reel in that energy and channel it. One of the things I'm often saying to them is don't be susceptible to, the media soundbite either. You ought to act as informed activists, because let's say you go pile into something. I mean, I can give you a million and one examples, and those of you who are in the biodiversity space get it. You pile into everybody, let's plant a tree. But if you have a million trees that are planted and you plant the wrong tree in the wrong soil and they all die, what have you done? Are we really thinking about this in a deeper way, or are we thinking about it in a broader context and all that sort of stuff? It's not like I have all the answers, but I'm constantly trying to challenge people to be better informed as they go about this behavioral change, so that they don't, find themselves, in the unintended consequences arena. So again, I don't know if that's answering your question, but my world is very rich with this whole stream of pretty much any constituency you can think of that wants to engage. I'm happy to try to push the agenda. It's pretty mission driven, I guess, at heart.
Wonderful. So
Marissa,
thank you so much. Thanks.
Yeah, Marissa, we have Jacob. Jake has been waiting to get a chance to mention something as well from the Nature Conservancy.
Thanks,
Hi,
and
Jake.
thank you, Marissa. Appreciate you taking the time to speak with us. This is really fascinating. I believe you mentioned, and I just want to clarify that I got this correct, that this work will intend to focus on public companies. And in the space of ocean improvers, could you talk a little bit about how you see the connection between a couple of things? One, maybe the partners that you hope to work with to help inform some of the impacts and outcomes, and how your involvement and investment in one of those potential opportunities would translate to making changes at the operational level of a company.
Mm-hmm. So for each subcategory, excuse me, we want to inform ourselves as to what could be the material changes that a company could make in its operations, and each one is going to be a little bit idiosyncratic to the company. So you'll have some very specific things that almost by category will be relevant to the category, and it's going to be different between, a consumer company and I don't know, a food producer or something. You can kind of look at it. I think you have to start with an industry lens, and then you figure out, what are the things that industry is doing that might be damaging the ocean. This now, we're speaking in the improver category, so for the avoidance of doubt, ignoring now for a second the first two categories, so it's really the improvers. What is it about that's unique to that industry, and then ultimately that company, that we can identify, because we're not trying to get them to be a different company. In this improvers category, it's almost like I would call it process improvement as opposed to business transformation. I'm not trying to take a fossil fuels company and make them a wind energy company. I'm trying to take an industrial company or a consumer company, what have you, that may be unaware of the damage it's doing through its operations, and saying what is material and what is measurable and what could you do that could be process-wise better. That's largely where the improvers world is going to focus. So I'm not sure if that's answering your question, but that's kind of how we approach it. So not enterprise level, but much more operational level. And then say to them, look, we think that there's a handful of things that you can do that will make a real difference. And the case that you make to them, because I'm sure the natural question is going to be, why would they want to do this? Like, why would they want to even engage with us? I think that, maybe by definition, the companies that are more aware and that are more self-aware generally want to improve. And those are the ones that are very receptive to the message, particularly if they don't really know what to do. And if you can demonstrate to them that the value creation opportunity in a combination of things. It could be capturing the hearts and minds of this activist consumer generation, depending on who their customer base is. It could be the attraction of interested ESG capital, including our own, right? The mission-driven capital that wants to invest in these companies that are making change, and that's a very powerful force. It could be that, we're helping them to fend off looming, prepare for looming regulatory change that's coming. There's just so many places that you could make the case for them. And fundamentally at its heart, what we're trying to say is, if you take some of these actions, you're going to create, and even come at a cost right now, on a net present value in terms of the future value creation that this little investment up front will create, will A, make you more sustainable over time, make you a leader in your industry, capture the hearts and minds of consumers, take market share, whatever the case is. But, you know, in a way, sometimes you think like, God, would they really buy that? Frankly, every company who's an ESG leader is already buying that, right? They're doing that. They're transitioning their businesses. They've already bought that story. And that's exactly what the investment community that's investing in these companies has bought that story. They're saying, these are the companies I want to invest in because they're going to create sustainable, real long-term value over time. And maybe sometimes we also give them the risk lens, which is the opposite side of that coin, i.e. if you don't do it, be aware, because this topic could be in the sight lines of that next activist group. Perfect example, of course, is, I hate to always pick on the oil and gas sector, but it's just the most visible. Look at what has happened. I can tell you, I have only been in this field full-time for 3 years. 3 years ago, I can tell you the number of conversations that I had with people about how long the shelf life of the coal industry was going to be. People were just saying, yeah, sure, it may get there at some point. Maybe a little thermal coal here and there, problematic. But we're talking about a 15-year time horizon. Look how fast it's happened. I mean, I didn't think in my near-term lifetime would I see Exxon drop out of the Fortune 50. And they've lost $280 billion of value in 6 years because the mindset shift is happening that fast. So I think there's also this topic that, if you're not aware of these issues, they could become real value destructive in due course. So I don't want to say it's always a carrot and a stick, but there's different ways of having that engagement. And then if they don't care and there are definitely the unaware and don't care crowd. And I sort of say that they very well may be those dinosaurs, it's the Kodak moment that you just kind of ride the party until the party's over and take that cash flow until there isn't any left, and then you'll get disrupted out of business. So anyway, I don't know. Does that answer the question, Jake, a little bit?
Yeah, that really does. I appreciate it. One other part of my question: will your team be doing that level of diligence and compliance analysis with those portfolio companies, or will you be partnering with?
That's what we're looking for Rockefeller to do. So in our partnership, we're the fund structure advisor. Pick the thematic, will obviously be engaging on the broader ocean topic, but the actual engagement, they're the investment manager and they will be engagement. And part of the reason we were attracted by Rockefeller is because of this 40-year track record. I mean, they've got demonstrable history in engagement, and they are engaged with some names that would maybe surprise you that historically, haven't engaged with the investment community, and they're achieving very, very strong effect. So we felt like they were the beautiful partner to do this. Like I say, we don't ever want to pretend and be so arrogant to say as Credit Suisse, we got all the answers and we're the best in everything. It's actually seeking out those partners that we think actually bring something really positive to the table where it's a perfect marriage.
Great. Thanks, Marissa.
Thank
like
you.
our partnerships with you guys, by the way, Jake. I mean, some of the things that we're working on together, there's no way Credit Suisse would know how to go about some of the things that we have on our docket with you, and that's why our partnership with you is so amazing. I mean, you're in the field, rolling up your sleeves, figuring it out at the ground level, and then we work with you to figure out how to structure that and raise the capital for it, and that's again perfect combination.
I would think in on that theme of the partnerships, and Marissa, I think the participants in the roundtable here and the World Ocean Council members would encourage us to pick up that discussion with you in terms of, I think we're very much on the same page in this this role that has emerged as the World Ocean Council developed, bringing together the diverse range of ocean industries, and especially the leaders and those that are seeking to improve, and helping clarify the issues and the opportunities and the risk, as you were saying, and then the other two parties that we've been increasingly bringing to the table, such as exemplified by by who all we have here, the investment community, and thirdly, as Andrew was alluding to, the innovators and solution providers, and really bringing that interaction together amongst the market, essentially the ocean users, the investors, and those that can help the market tackle its problems, and really elucidating, analyzing the issue, focusing on the solutions that will make a difference for those companies, and really creating that set of opportunities. This has been great. I think what we might do, and hope you can stay with us for the next 20 minutes or so, Marissa, unless there are any burning questions. I'm just checking the chat room here. I think.
Can I throw one in?
Sure. Let's take advantage of having Marissa here, please.
Okay. So Marissa, in terms of the corporate world, you talked about, material, being measurable, auditable, comparable, all that. That's on the corporate side. On the asset owner side, measurability comes up, everywhere now on every RFP. So could you talk about with this fund, or more generally, how do you guys measure impact?
Yeah. So great question, and a very challenging question, because the measurement piece, there is no common standard, just like there is no common standard for what is even green, so that is one of the challenges of the maturation, I think, of the sustainability and impact space. And impact is even harder because it's mostly in the liquid and it's patient capital, and so the measurement, takes time to the outcomes take time to realize. What we try to do is be very transparent about what our objectives are in our funds and in our impact funds specifically. And therefore we say upfront, here's what we're trying to achieve, and here's how we're going to measure ourselves against that outcome, both from a financial return point of view and impact point of view. I really don't want to take up too much of this group's time, but we're also very clear in terms of what I call the spectrum of sustainable finance. And here's a whole nother bucket that we could, dive into for hours about the lack of even common definitions between responsible investment, sustainable investment, ESG, impact aligned, and so on. We've tried to bucket these into categories to define what we mean when we say ESG versus impact. On the impact side, which is the hardest because of the illiquidity and the relative maturation, we are signatories and founding members of the impact management principles with the IFC. We help them work on a set of principles to try to at least create a standard for asset managers of what good looks like in terms of following a process to identify the additionality of your capital and measure it and report on it and so on. But that's very much a starting point, but at least it provides, I would say, a roadmap for how good asset managers think about impact, because I'm very, very aware that in a space that's not defined, it can lend itself to greenwashing or impact washing. I mean, if you want to get a little bit, cute, you could say every investment has an impact, so why don't we call it all investments impact? I can say that when I put an impact label on something, we are saying that we are creating deep impact with that investment. We're deliberate, we'll measure it, we tell you what we're measuring, we tell you what we're trying to achieve, and we'll either create a deep impact in the environment or on the environment and in a social cause, or we won't call it impact. So there isn't a common standard. 1,000,001 people are on this. I can't tell you how many initiatives there are around trying to measure and create a standard. I think we're a little bit in the world of, you know it when you see it, and you know what it is when it's not, and there's a little bit of judgment. So the best that you can do in the absence of a common industry standard is to be transparent. And then your investors will either say, I agree with that, or not, and let the investors decide. So someone's superficial on it and they don't really care, they may still invest, and I can't judge whether that's appropriate for them or not, but I definitely know what I stand for and what our funds stand for, and we're very clear on that. And so that's the best I think we can do today. But I do think the industry will coalesce around some common aspects of measurement. The ESG world is further ahead. You have things like, SASB and GRI and other initiatives in terms of trying to create a better level of common transparency and comparability. But even they are early days, and there isn't a common agreement. But we'll get there.
Good question. Good question, Erica, and great to hear your thoughts on that, Marissa. And in fact, it's one of the ongoing agenda items we have with the Ocean Funds Roundtable. And really, the sense has been that creating a critical mass around the development of the metrics and the measurements somebody's got to do it. And what I'm seeing from the big tent kind of view from the World Ocean Council, as you said, a lot of people are working on it, on overall impact and how to measure and what the metrics are for ESG. And now many of the people around the table here, their entities, their organizations are starting to work on it from an ocean perspective. And I'm seeing these and seeing some, gaps in everybody's. And so if we could get a group effort, a kind of a critical mass, and so I would love to pick up that discussion with you sort of on behalf of the group here to say, well, we're working to create that collective process that may then be able to lead into a standard on the blue economy, the ocean piece of sustainability investing that has the weight of and the credibility of a diverse group contributing to that. That can help kind of move the game along by developing metrics and measurements and indicators, and also save people time and money and effort by having it as a more collective effort rather than everyone having to do it and re-explain it to each investor relationship having to be explained by that kind of bespoke version. So I think there could be some real collaborative value there to engage with Credit Suisse on that effort.
Yeah, and I think we've certainly interfaced with a lot of those who are really taking this on as what I call a day job. And I do think they'll be coalescing, and I think some of it might be regulatory driven and some of it will just be the natural consolidation. It'll be the Sony Betamax question, who ultimately survives and may the best survive. But I think the best outcomes are typically done when you have cross-sector collaboration to come up with best outcomes. When it's the regulator driving it, you always end up, I hate to say it, in a slow process, but also in a bad process, because not being an industry practitioner, they don't necessarily always appreciate the unintended consequences, of putting in place a particular piece of regulation. So I think the best things that evolve on these are where you have lots of voices in the room challenging each other on, is this really impactful? And the investment community, avoidance of doubt, what they're looking for is financially material items, right? Because the other thing is that I say is if I go in as an impact investor and I tell a company I want you to measure 50 things, across an entire spectrum of the E and the S and the G on impact, you're going to drive them crazy and they're not going to be able to run the business. So what are the one or two things that we're trying to drive with our capital, that outcome that we want, and really focus? Obviously, you've got a baseline, right? You've got to be a decent ESG steward. You can't be on the one hand saving the environment and creating hard labor policies or the inverse of that. But let's assume that, there's a baseline of standards for what decent and good looks like. But then over that, pick the one or two things and really go deep on measuring those. And you can't sweat the small stuff because otherwise you're just never going to get anywhere. And then be really transparent about it. I just really think that that's kind of where we are right now, at least from my point of view.
Yeah. Okay, this is such a great discussion and such good interaction here. Really appreciate all the time and energy you're putting into this, sharing with us, Marissa. What I would suggest is that we quickly just have a look at the agenda that we were going to cover and hit a few high points and lots of expressions of appreciation here in the chat room for all this, Marissa. Quickly touch on.
Yes, anything's been directed at me. I think it might be my firewall is not allowing me to access chat.
No, that's okay. That's
I can't see it.
Just to let you know that that is there. So let me quickly pull up again the agenda. There we go. And as you can see, number 7 there was exactly that item we were just touching on. I'm going to jump forward just quickly to number 6 here on what had been coming out as the area we wanted to start with, and we'll just touch on that. And we do want to respect keeping the call to 90 minutes, and then mention a couple of very specific developments there in 8 and 9. So let me. We're not scrolling here. What's going on? There we go. So we have over the past couple of sessions and months, worked on defining who the group is, and this is all in the slide deck that everyone has available. I was just sort of updating everyone. We won't get into this purpose, goals, and objectives, so those of you that are new to the call can look at this as we've narrowed in on getting that sort of groundwork set and the kind of the framework, the architecture of this. Again, you can see the measures and metrics issue in there. And so the priorities that had come out of the previous few months' discussions, particularly a consistent interest to better raise awareness and create a better informed investment community. And that's certainly come up a lot from what we've heard from Marissa and Credit Suisse and where they're going with things, and part of their goal in terms of creating that community, even if it's not necessarily investors that continue to work with and through Credit Suisse, if I understood correctly. And so where this was going was the opportunity to create a more, to create a community of practice that then could help raise that awareness, particularly with institutional investors. So for those funds that are seeking to build their resources, and rather than, again, have bespoke one-off relationships, not relationship, but outreach, really create strength in numbers and diversity by compiling a sort of a genre of the ocean investment fund community, and then reaching out with and through where appropriate and valuable, the assistance and context of the World Ocean Council, creating briefing sessions as we have done already over the past 3 or 4 years with, for example, the Sovereign Wealth Fund Institute, and other ways in which we can, as a group, develop these materials, and other ways in which then we can, WOC can help then promote this context of all of you in this growing Ocean Fund Roundtable community, and each of you individually can be using that collective material. So I'll open it up quickly for a few minutes here, and we've talked about, on the right, you see some of the context in terms of content, in terms of what we had been talking about putting forward. And any thoughts from particularly those of you that have helped sort of develop this thinking and this priority as we move forward? I don't know if Jihan and Tony, in particular, early on, you had jumped in and really helped develop some of this. And unfortunately, Michael from Australia is not able to join us today. But this had continued to be a very steady piece that came across as we've been working. Let me just check. Okay, it looks like Jihan and Tony from Marine Capital had to sign off. Well, we'll pick this up in the next month's call, which we'll schedule for earlier in the month, so we can get back to work on this. I will go ahead and we'll be. This is a placeholder here, and we've had a bit of that discussion. I do also want to mention that. We have been reaching out to and had some interest from the philanthropy community on better connecting with the investment community on ocean sustainable development and conservation, and ESG for the ocean more broadly. This is work that, and why there's a blank slide here, it's really very current work to really map out what that might look like, creating that interface, and it does certainly with family offices. There's an overlap there already inherently, but really creating a more structured process for looking at how leadership from the investment community and leadership from the philanthropic community can perhaps be woven together, and in particular, bringing in then the actual ocean business community as the target of, as we've been talking about today, the target for investment by the private investment community sector and philanthropic endeavors to improve practices, change practices, that behavioral change we talked about. So this is something I'm working on developing and elaborating on the outreach to those that we know in the philanthropic community that are heavily involved in ocean issues. Happy to open this up if there's any thoughts on this as we start to explore this as a way to, I guess, create a multiplier effect and leverage this growing community we've got with the Ocean Funds Roundtable.
Yeah, just a comment from me, Paul, on that. What does occur to me is, having heard Marissa's great presentation and the back and forth among people on the round table, what's clear to me is that our role for the World Ocean Council is to reflect, act as a sounding board, if you will, to reflect the seriousness with which the seriously wealthy, be they funds or be they corporations or be they individuals, take a proper and appropriate behavior by corporations, and that investment decisions are going to be taken, are being taken, and are going to be taken at a very high level and very serious amounts of money that will reflect those decisions. And what we can say is this is what we know, and the more we can reflect that into the business community, and we can reflect back into the financial community that there are businesses and corporations that are looking to do the right thing. That would be a very powerful role for us to play, and a very proper role for us to play. Just making it very clear that this is, that there is a choice here. Some of the language that Marissa was using was great. Unaware and don't care. I love that. And I'm sure we're all aware of businesses like that. We're all also aware of businesses that are fighting really hard and trying really hard to do the right thing. And it does strike me, having listened carefully to Marissa, again, fantastic presentation, that there's something of a role in there for us.
Yeah, and certainly those that do care, that was the whole concept behind the World Ocean Council. It's a leadership alliance. It's about a group that says, yes, we do understand there are challenges. We don't have it all figured out, but we know we've got to do things, and we know we need to work with other companies within our sector, and particularly for those that are new to the roundtable, and for Marissa, the cross-sectoral nature of this, that it's a big global ocean ecosystem that's interconnected. That is the operating environment for a whole range of industries, and bringing them together around collective ocean health and productivity, and addressing their practices across the sectors for many, many issues: biofouling and invasives, marine sound, et cetera, marine debris and plastics. So this is that space where we've been working to identify leaders and bring them together and sort of create that structured interaction, as you're saying, Andrew, with the investment community is really where we want to go with this, and what led to the development of the Ocean Investment Platform component of the World Ocean Council. I know we're just about at the 90-minute mark, and I will just mention then very briefly to finish up here that many of you met through our Sustainable Ocean Summit, particularly which is happening annually now for many years, as the gathering place for the business and investment community around sustainable development, and the SOS 2019 in Paris that had a very major focus on investing in ocean futures, as we called it. Obviously, like everyone, challenged this year by the pandemic situation. We had been invited by Saudi Arabia to hold the SOS in association with the G20, and that had moved from a physical event planning process to a virtual event planning process, and now the G20 has they came back to me a couple of weeks ago that they are just so overwhelmed, changing all of their core required gatherings, and including just 2 days ago, they announced that the Global Leaders Summit now has become a virtual event, that they had to basically not plan to do any associated events with partner organizations under the G20 umbrella. So we have, and we just had a board meeting, WOC board meeting yesterday, quickly pivoting to then having a Sustainable Ocean Summit by early December, and we'll be planning to have a focus session or two on the continued momentum here with the investment, ESG for the ocean, blue economy investment, sustainable development for the ocean, and the finance community. So we'll be shaping that up and coming back to all of you to see how you all want to get involved in that as we move forward. So with that, I will stop. We're just over the 90-minute mark, and really appreciate everyone's interest and energy at a very late hour for some, and especially a major thank you to Marissa for putting in the time and energy here. And we'll be following up with you on behalf of the World Ocean Council and the Ocean Fund Roundtable. And really tremendous thank you, Marissa.
Yeah, thank you, Marissa.
Thanks, everyone.
Thanks so much. Thanks, Marissa.
Look forward to following up and continuing the dialogue. Take care. Bye.
Thank you, everybody.
Bye.
Good night. Bye-bye.
Everybody.
Bye.
Cheerio.
Bye-bye.
Bye-bye.